To Bruce Coburn for putting together that beautiful tribute to the IMF and all the terrible things that they do. One day you're going to rise from your habitual feast and find yourself staring down the throat of the beast they call the revolution. I think Bitcoin's that revolution, right? And he didn't know it at the time, but I don't know. It's beautiful. Okay. Next panel is one I have been waiting all week for. I'm quite stoked. We have a group of absolute legends up here. Not heroes, because heroes get remembered, but legends never die. And these guys are all absolutely amazing. I've had the pleasure of meeting them in person and cannot say enough good things about them. So we've got Greg Foss, we've got Samson, we've got Paolo Ardoino, we've got Max Keiser. This panel is going to be moderated by Bitcoin Dad of the Bitcoin Dad podcast. So please welcome all these guys to the stage. Let's get some energy in this room. This is going to be a good one, guys.
Thanks everyone for coming out. Our guests need no introduction, so let's not waste any time. Just to start out, Paolo, the discussion of tokenizing sovereign debt often happens in relation to Tether, Liquid. Stablecoins seem to be a part of that discussion. How do you view stablecoin technology in the context of tokenized sovereign debt? Will the sovereign use stablecoins, or is it more of a funding mechanism?
Yeah, so I think that the aim of a stablecoin is to allow a more, let's say, democratic access to participate to sovereign debt issuances, right? So if a government wants to raise capital, if the government wants to raise capital for building infrastructure, to build schools, to build, energy, production, mining, Bitcoin mining, whatever, right? But the goal is not to keep what they raise in a stable coin, but they can use a stable coin as a way, as an on-ramp to receive funding. So I think that when we talk about Tether on Liquid as part of the different models of funding a government-issued bond, for example, it's all about providing the funding. So the interesting aspect of this, or the effort that we are doing at Tether and Bitfinex, is trying to democratize access to good government-issued products. And sometimes is extremely hard, is extremely complex. So not everyone can have an easy way in, right? So stable coins are helping that process and making it more easy.
Thanks. And Samson, you've been focused on sovereign Bitcoin adoption and tokenizing debt at the sovereign level. How have so do you see this as a primarily Bitcoin-focused effort, or is there a stablecoin funding mechanism? And is that important because of the technological aspects or the lack of political gatekeepers to capital for sovereign countries?
So it's a bit of both. I would say funding this type of instrument using a stablecoin like Tether USDT is a big advantage, because at least for the volcano bonds, I believe President Bukele wanted to tap into the global diaspora, the Salvadoran diaspora. And one of the easiest ways for them to fund it in dollar-denominated value would be through USDT. And I guess your other point is valid too. You don't need any middleman. You don't need to go through merchant banks. You can just use a stablecoin to fund it. So I'd say it's a mix of both. You eliminate some middlemen, you increase efficiency, and you can tap into a broader market. There's also the benefit of the payout instrument. So the volcano bonds were designed to be on Liquid. And the idea was you could have a minimum investment amount of $100. But the only way to pay the coupon out on an investment that size would be probably through a stable coin, because you have to pay potentially millions of bondholders. And to do that size of a minimum buy, you need something that is really cheap and efficient. So it could be USDT on Liquid, or it could be hyper credit or pair credit down the road too. So there's a lot of interesting ways, but we have to use the technology available to increase financial access and freedom for everyone.
Great points. Max, the discussion of using volcano bonds, Bitcoin, and non-traditional funding sources to build out energy infrastructure in El Salvador, is this generalizable? Do you see this new path towards sovereign capital markets relating to energy infrastructure in particular?
Right. Well, in the case of El Salvador and all over Central America, you've got stranded energy. You've got volcano energy out there that you can monetize with Bitcoin mining, and then you can use that to collateralize bonds, and those bonds go into the international bond market, which is really the second biggest market in the world, second only to the Forex market. And so it bypasses all the traditional financing avenues and the gatekeepers. So the traditional gatekeepers, the traditional avenues like the IMF and others, there's a lot of strings attached, and it's a trade-off, and countries forego some of their sovereignty in exchange for access to international markets and IMF and other vehicles. But here, sovereignty can be kept. You don't lose any sovereignty, and you can put out a viable, attractive bond that would go out into the international market. And to the extent that you're tapping into this stranded energy, you know, it's potentially a huge win for a country like El Salvador.
And on the subject of sovereignty, the recent act of the U.S. and their allies to freeze a foreign nation's central bank reserves kind of cast question on the sovereignty of U.S. dollar-denominated bank reserves. Greg, you talk a lot about the importance of pristine collateral in bond markets and credit markets. How does Bitcoin and tokenized sovereign debt fit into your view there?
Well, firstly, listen, thanks for having me. I'm from Canada. We don't really matter in the global financial marketplace. And I want to hit on some things that might have flown over people's head to begin with. Max mentioned that the bond market is second in volume to the foreign exchange market. That is true. But the bond markets are far more important than foreign exchange. Why? Foreign exchange markets trade 75 times the volume of global trade. Think about that for a second. Why would you need to trade foreign exchange 75 times the size of global trade unless you were just speculating on fiat? It's bullshit. Okay? The most important markets are bond markets. Why? They rank highest in the capital structure, and they fund countries and companies. We're focusing on sovereign countries here. In every single investment in the world, there's risk and return. In a bond market, the risk is calculated by the spread that an issuer has to pay over and above the quote-unquote risk-free rate. Now, it's not risk-free, but that generally means the U.S. 10-year Treasury rate or somewhere along the U.S. dollar yield curve. So first thing you do is you convert all of your borrowing into a U.S. dollar equivalent, and then you measure the return you have to pay above the risk-free rate. Is that clear? Secondly, then, you determine what things can reduce that risk. If you collateralize an investment, that reduces the risk, right? Think of a secured loan, collateralized with a pristine source of collateral versus an unsecured loan, where you just rank in line with other unsecured creditors. My pitch is as simple as this. In life, there has to be a price for everything. Much like in borrowing in the government bond markets or sovereign bond markets, there has to be a price or a spread at which the world will lend to any sovereign in the world, whether it's IMF guaranteed, whether it's got collateral, whether it's the 182nd ranked fiat country in the world, there is a price. Every single institutional investor in the world has a choice of allocating capital somewhere along this risk spectrum, okay? Using Bitcoin as collateral, in my opinion, is a source of reducing your risk as a lender and increasing your claim or protection in the event of a financial decline in the creditworthiness of the counterparty. Very simple. Always look at the credit spread versus the benchmark risk-free borrower in the world. Unfortunately, they call it the USA. It's true, but the USA is just the best-looking horse at the glue factory, okay? We have to compare it to the best-looking melting ice cube. That is the USA, and everything else is a credit spread above that. Bitcoin is going to revolutionize this, very simply. But that credit spread changes with macro events. It changes with the value of the collateral. It changes with the risk appetite of the investor who is determining whether they want to use Bitcoin and see stuff like what's happening with FTX right now and the potential of losing that collateral. All of these things go into pricing a bond. It's not child's play. It is sophisticated credit risk pricing, but there always is a price. Remember that. And yes, it will improve on that functionality.
Open question. We're in the middle of some market volatility. This affects the price of all assets, including Bitcoin. How is this affecting the conversations around tokenizing sovereign debt? Hodler plebs like to buy the dip. Do new entrants, sovereign governments have the same point of view, or is it a difficult conversation?
Well, as Bitcoin becomes the unit of account, it's less and less of a conversation. In other words, countries have a need to access capital markets. Bitcoin is the unit of account, and they go out there and with the best offer they have. So I don't think the volatility in Bitcoin is meaningful in any way, because it's the volatility in everything else that's meaningful. Bitcoin is actually not volatile. It's actually not moving. It hasn't moved in 12 years. But the rest of the world has moved. And if you are on the right side of the history, you'll benefit from this. And if you're not, you will be crushed by it. So that would be my opening comment.
But when you talk to government stakeholders, do they understand that?
Well, I've always said from the beginning that one of the greatest adoption motivations for Bitcoin is fear. And this is true across many capital markets. People are scared into things more than they are loved into things. And what these sovereigns see is the fiat world collapsing. And the volatility in Bitcoin on a relative basis is shrinking. So, and these fiat currencies are at risk of disintegrating completely. And every single fiat money since the past 300 years has always lost 99 to 100% of its purchasing power. That's without exception. So it's a perfect track record. All fiat money goes to zero. And so with Bitcoin, you can go against that trend.
To add on Max's excellent comment, there's game theory that will come into play, as always. We can look at the issuing countries, but we also have to look at the institutional investors predominantly that will lead the charge into this new asset class. And what you are seeing is game theory playing out on the institutional investor side. So do you think BlackRock actually wanted to offer Bitcoin-denominated products to its clients? Or do you think it was BlackRock realizing that because Fidelity is doing such a good job, BlackRock better get on board or risk losing more clients to Fidelity? Well, I assure you it's the second, not the first, okay? I started trading high-yield bonds in Canada 35 years ago when there was no demand for high-yield bonds in Canada, even though the institutional investors in Canada owned all the equity of the high-yield bond companies that had to go to the United States market to issue high-yield debt. Now, how ridiculous is that? You own a subordinated claim called equity in a company. You won't even buy the bonds because the bonds are too risky, according to you, because your investment policy committee says it's a junk bond. Well, if you own a junk bond, what do you call the equity? super junk equity, okay? It's a pejorative, it doesn't matter. But line yourself up on the risk ladder and then flip it to a country. I know there's no equity, but if you have an infrastructure that's built on a Bitcoin economy with energy plays and mining plays, as a credit investor, you look at this and you say, this is all reducing my risk. And in fact, it's got a decoupling effect, or a, how would you call it? You would call it a diversification benefit. That's not the word I was looking for my fiat risk that's everywhere else in my portfolio. Wow. I can come and invest in a company that will diversify, a country that will diversify the rest of my fiat exposed portfolio, because it's got Bitcoin collateral, it's got a Bitcoin economy, it's got tourism that's going up, or GDP that's increasing 10% annually. Guys, do the math. I know there's some surf shops that don't accept Bitcoin, but the fact is the top line of the economy grew 10% on $28 billion. That's $2.8 billion to the Treasury. What's a good tax rate? 20%? Okay, 20% times $2.8 billion is $560 million of increased revenues. Oh my God, they lost $50 million on their Bitcoin portfolio. They didn't sell it, but let's mark it to market. They're still up $500 million to the good guy. Do the fucking math. I don't care if there's a surf shop that does not take Bitcoin yet. They will. Not every single merchant in the world took a credit card right on day one when credit cards were offered, okay? I'm sick of this fucking bullshit, people saying you can't walk around El Salvador and do everything with Bitcoin. It's 1 fucking years old. And the top line grew by 10%. God fucking damn it. Stop with the bullshit, okay? We are not going to flick a light switch overnight. And I'm talking to my good friends in the Bitcoin community that are walking around saying that it's not working down here. Look at the math, grade 11 math. I'm really sorry, but I am a full-on Bitcoiner, and this place is fucking beautiful, but not everyone has got the message yet. Sorry for the rant. Over to Max Keiser.
I just want to add, I'm using your example now, Greg. I'm doing the math and showing people like they're up like $500 million when I do interviews and stuff. That's an excellent example.
Yeah. Thank you.
So just to return briefly to the capital structure, because in traditional bond issuances, capital structures are arbitrated by courts, there's often a lot of legal gray and uncertainty around that. This can lead to inefficiency and high cost. But with a tokenized sovereign debt offering, this can be done programmatically on an open system. Paolo, can you comment on that, and maybe Samson can follow up in your conversations with stakeholders?
Sure. So the beauty of having a tokenized debt is that you can have suddenly a disintermediated secondary market that can be offered on a platform, right? So with El Salvador, for example, we are discussing about the usage of Bitfinex securities. So the Bitcoin crowd, right, the Bitcoin holders have a ton of capital, right? And I think is fair to expect that as many of us, we want to see El Salvador succeeding, right? So they are so brave, right? No one attempted what El Salvador is doing. So, you know, all the other places trying to hedge their bets on 100 different currencies, cryptocurrencies. They try to, you know, just do marketing to attract a couple of companies and have some big headlines. But El Salvador went into this adventure knowing that it wouldn't be a walk in the park, right? So they had the IMF shouting at them, other countries mocking them, right? And the most important thing, right, from 1 year to another, is that the focus, they are doubling down on Bitcoin. So this is making the Bitcoin community more and more excited. And if they can have an open market that is transparent with you know, low fees, easy access, and so on, I think that will prove that whole the history of raising capital for governments and private companies could have been efficient much earlier on, right? So imagine if you can remove 5 different intermediaries for issuing debt and also for trading this debt. You will save a ton of fees that will be going in the hands of the government, and that money, that additional money can be used for infrastructure, right? So that's the thing I'm more excited about, right? So how we can disrupt, you know, this over control that traditional finance always had in deciding what was good or bad. The interest rates decided, you know, where these things should be traded, who can access to trading these products. That has been extremely unfair because in that way you limit the possibility of countries of saving themselves, right? If you are a sovereign country, you should be able to save yourself and talk directly to the investors, bringing investors down here, as El Salvador is doing, showing your country, showing what you are doing, and they should have a way to go home and decide with their own minds, after they have seen everything, after they understood, of course, the product that they could buy into, they can decide if buy, sell in an easy open market. So that, I think, what a tokenized debt will bring to the people, right? So this is a game changer, and the more we see the IMF, traditional finance, be loud against it, means that we are doing a good job.
So I would say I'm very bullish on tokenized securities. It's a modernization of old financial plumbing. There's no reason why securities, bonds, and the like aren't trading 24/7 like on Bitcoin exchanges. It's just inexcusable, right? If you add up the total aggregate trading time of Bitcoin on on exchanges versus traditional securities, we have more trading time than some stock markets, right? Just because we're open 24/7, 365. I think the other interesting thing is the design of the Bitcoin bonds is fixing the base level architecture of bond markets, right? So if you look at a bond, and it's like what you said about doing the math, I don't have a good analogy for it, it's more like open your eyes, but the composition and design of a TradFi bond is really the same as FTT, right? What's backing it? It's this minted out of thin air thing. So the innovation of a Bitcoin bond is there's 2 parts of it. One is it's backed by hardest money on the planet, 21 million supply, and the other part is a revenue generating activity that will cover the coupon. So this is the real thing. It's a shift in thinking about how to create these instruments to make them in a way that they are sustainable. Otherwise, it's just a bond with thin air underneath it. So I think as countries do this and as it becomes the standard, we'll fix a lot of the overall bond market and underlying plumbing of financial markets.
Let's be careful, though, because there always is a price, right? So you're hitting some really solid points, but there are lenders out there that will lend on an unsecured basis based on the cash flows of any borrower, okay? Junk bonds. Incidentally, I forgot to say, after 20 years in Canada, every single institutional manager has a high-yield bond portfolio mandate now, just because it makes sense. And the same thing's going to happen with every single institutional product in the United States will have a Bitcoin allocation. But getting back to this, there's secured lending, there's unsecured lending, there's a price for everything. Obviously, the price for unsecured lending results in a higher credit spread or yield spread. But that price is available. And there are lenders that will lend on a secured basis and on an unsecured basis. I'm taking my experience from the high yield market where you have first lien loans, you have second lien loans, you have convertible debt, you have all sorts of different ranks in the capital structure. That is just the market efficiently pricing the various risk in the market. The problem is when the IMF starts to dictate who can borrow and who can't. And that's the big case in the case of El Salvador. Because why? Again, I try to break things down as simple as possible. If I'm a credit guy and I'm looking at El Salvador and I'm like, they just increased their top line by 10% and increased their revenues by 560 million approximately, is there any wonder that they were able to buy back their debt at 54 cents on the dollar? By the way, Bukele, you're a friggin' smart arbitrage trader, okay? Guess what? I want to buy El Salvador debt right now and hold it to maturity. Why? Because from my perspective, it's an incredibly good risk-adjusted return, even though it's unsecured. I've done this my whole life.
We can help you with that.
Sorry?
We can help you with that.
Dude, I promise you, there's always a price. Secured lending will open this to the world where you do not have to rely on this IMF guarantee, okay? The IMF can be your friend. I'm not sure I've ever met anyone who is the friend of the IMF, but apparently they can be your friend. Let's remove that from the lending process. Let's find out how efficient markets price real risk, and collateral will be a big determination. But so will the top line. More people coming to El Salvador, buying properties, expanding the economy. It's a $28 billion economy. You know what's the great part is it grew 10%. The reality, it's a smaller economy than the greater Miami area in Florida. That's just the way things rank in the world. Opportunity, but you got to put it on the spectrum of where risk, return, rank, growth, etc. It's not easy in a macro environment that's blowing up as well, but there always is a price.
Speaking of the IMF and a blowing up macro environment, does the presence of alternative sovereign debt markets, maybe on liquid, maybe other options, does this create positive incentives for countries to negotiate with the IMF? So they still may be utilizing TradFi sovereign funding, but with this as a bargaining chip, their negotiating power increases? Open question.
Well, I don't think the IMF is interested in negotiating. The IMF wants to run a monopoly, and they are a rentier organization. And if you don't abide by what they like, they come into your country and they kill you. That's not really a negotiation, is it? And we've seen that over and over again. There's 15 governments have been overthrown in this particular part of the world over the past few decades, principally orchestrated by the IMF, the CIA, right? That's not a negotiation. That is robbery. So as far as, you know, what Greg is talking about with the risk-adjusted returns and how markets reflect that in terms of the yield and the yield curve, you know, there is a fundamental problem that Bitcoin solves, and that is the problem of price discovery. So price discovery, which is, you know, typically the supply and demand function, which results in the yield curve, which then gives the ability to price paper and bonds in a way that the market's acceptable, has been corrupted by the presence of this infinite fiat money and corrupt central bankers that have reversed the price discovery model, that it's no longer supply and demand that drives the prices, but the prices are determined first, and then they fill in the supply later. They fill in the market later. So every single price that we see in all these bond markets and currency markets and various markets around the world, commodity markets, gold market, is not a reflection of true price discovery. These are prices that are scripted to create a political agenda. So we've left free market capitalism. We no longer live in a free market capitalist world. Bitcoin reintroduces capitalism. It's been absent for a number of decades. And for some, that may be a shock. It's not going to be a shock here in El Salvador. They're loving it because they're entrepreneurs and they want to get paid for their work and they want to grow and they want to be part of an economy that's a true meritocracy. They don't want to have to, you know, Greg, I think would back me up on this. In these financial centers like Wall Street and other places, you get rewarded by the amount of fraud you commit. That's the rewards based on the amount of fraud you commit. And that's a fair statement. That's not hyperbole. I'm not making that up. So morally and ethically, you have a society that is one where fraud is rewarded, and that results in societal breakdown. And look at the values and the morals and the free market, the capitalism in America. You have a society in a moral free fall. Literally, they're literally in a dire strait. Sodom and Gomorrah comes to mind, to tell you the truth. So. And that's because you don't have legitimate price discovery in the bond market. I know that's a stretch, but that's what I would. That's what I believe.
Okay, we have to wrap up. So please, everyone, take 45 seconds and just give a final thought to the audience. Let's start with Samson.
So I think it's very important that we try to encourage nation states to break out of the IMF's hold and showing them there's a better way forward. The fiat system is going to collapse, as we all know, but it's going to be prolonged as much as possible by the powers that be. Argentina is a good example. Like, they've redone their currency a number of times or rebooted it, right? But the definition of insanity is doing the same thing with an expected different outcome. And they're probably going to do it again instead of going to a Bitcoin standard. And these are inflection points at which we can try to put ourselves into and steer it in a different direction and get them onto a Bitcoin standard, like maybe Switzerland through Lugano, and other countries around the world. So we have to do our part and get on the ground like we are here and make things better.
Greg?
I don't want to be the last word. I tend to talk too much, but here, Samson, great point. Argentina has defaulted 4 times in my career. Can you imagine? There's never been a 30-year bond that has matured in my career because they've never paid off a 30-year bond, okay? Don't keep doing the same thing over and over again. That's the definition of insanity. Here's the crux. Argentina is a G20 country. G20, okay? Canada is a G7 nation because we live in the attic of the USA rent-free. We're very lucky. But we will default 20 years before the USA does. 10 to 20 years by my estimation. That means the USA will still be around a long time. That's my final point. The USA will survive the longest of all the melting ice cube fiats. All you have to think of is Bitcoin as being credit default insurance on a basket of fiats. It's the most beautiful asymmetric trade and investment opportunity that I've ever seen. Shout out to the crypto couple, my good friends who are on stage. Shout out to all of the Bitcoiners I've met in El Salvador, and President Bukele. You are changing the world, sir, and I'm here to help. Let me know how I can help.
And Paolo, your final thoughts? Well, let's let Paolo speak, and then Max can close us out.
Right. So, well, the thing that I like about the, for example, the Volcano bond is that, in a way, is partially unsecure because you have $500 million that is kept in Bitcoin, right? And also, there is an incentive that is a public incentive by governments that want to follow the steps of El Salvador, right, to deliver on the promise of why they raise money. So they found a great community that is the Bitcoin community that can help. So we grew so much in 14 years, and now we are at the stage where we can help countries. And only the countries that will be delivering on the promises when there is capital, they will continue to get the support of the community. So in a way, we are creating a system of incentives at government level to develop and build on Bitcoin, because that Bitcoin will help them and will help their population.
Thank you.
Well, I think that adoption of Bitcoin is 100% in El Salvador because the mindset has changed utterly in El Salvador. For example, people are very intolerant of violence because Bitcoin monetizes peace and love and demonetizes war and violence. And the government realizes this. They were impacted by Bitcoin. They went out and they got rid of the export from California, the gangs, the MS-13. And they said, hey, America, come pick up your garbage. We don't want your fucking terrorists in our country anymore. And that's the result of Bitcoin because Bitcoin become intolerant of shit like that. And the country is the right to do so. And what about the human rights of the 7 million Salvadorans who are now benefiting from the ex-dividend of 54,000 gangsters? Thank you very much and have a nice day.
Thank you so much, everybody. I'm the Bitcoin Dad of the Bitcoin Dad Pod. If you like conversations like that, check me out. RSS, any podcast app except Spotify because they're a walled garden and they suck.